everyone, Les here from BG Trading. Hope you are well. Today is November 8th, 2022. When is the next market correction? Let's have a look. Just want to remind, this isn't financial advice. It is just us from BG Trading. How we set up targets, stop losses, and much more, all in this channel. So if you like the content, you like our analysis, please share this video with someone that you believe would be interested, and subscribe the channel if you like. Now, I'd like to invite you to become a member of our free Facebook community, Buy, Grow, Sell Strategy for Share Traders, which we normally share with our members, not just the VIP members, but all the members of this free Facebook community. We normally share some of our stock analysis, and this time we shared this very same analysis that I will be disclosing, I'll be sharing with you today. So now let's jump straight into this. Now, first of all, the reason that we have put together this analysis is not just to warn people that the market could correct, but also showing you how to profit from potential correction, which is something that we have been doing over the last few years, profiting out of correction. Not by shorting stocks. We don't really like shorting stocks, but shorting the overall market via what we call ETF funds. I'm going to go in details later on. We also have videos talking about those ETFs, but now I'm going to focus into the analysis of the stock market. Let's start with SP500. SP500 is critical for us, first of all, because the Australian stock market normally follow the SP500 or even the NASDAQ movements. So essentially meaning that all market tends to go up if US does really well and vice versa. And that's one of the reasons, obviously, that has brought ASX into a bear market, is because US is bear as well. Interest rates are going up, blah, blah, blah. We all know this story. I'm going to go in detail after. Well, let's start with SP500. Now, as you can see here, since COVID crash, let's take my face a little bit upwards. Here you go. This is COVID crash here on the side. Can you see it? Yeah. So you see the SP500 fell really, really sharply, and then after that, it's sort of tripled its value in the following 2 years, from 2020 to 2022. And then now what's happening is it's correcting. Or we call it is in a bear market. This was bullish. You would have made a lot of money here just by actually holding SP500, but then now it's bearish. And what we seen here, as well as happened on the bullish side, we have seen a bearish channel here, bearish channel of SP500. And I like working with channels just simply because they are very effective. Like the market tends to follow those channels. But at the moment, what we see here is obviously a descendant channel on the SP500. A lot of these generated by NASDAQ going down, the heavy tech stocks going down. But as you can see here, it has been bouncing back in lower lows and lower highs. That's what's been happening here. And in the last 30 days, pretty much, we've seen a recovery from SP500, and then it went down again and looks like sort of recovering again slowly. But I'm estimating if the market keeps following this channel, which is likely to happen because it this in downtrend. I'm estimating to see another 3 to 4% on SP500 going up towards to 4,000, 3,900, 4,000 most, and then followed by a correction, a correction right after that. And the correction could well bring to at least to those levels here, 3,600, which would represent a 10% down on SP500 at least from today. But if the market rises another 4%, then will represent like 14, 15, probably 15% down from that. That would potentially go through December, maybe end of November, but most likely December. A lot of people talking about Christmas rally. Let me tell you something. If you're hoping for Christmas rally, that makes no sense. Christmas has nothing to do with the stock market. What happened is a lot of investors go on holidays, go away, and the volume of trading moves significantly lower than usual. But the market's in there, the value is in there. So which means whatever movement happens through Christmas, it's not really true because the volume is going to be essentially lower. For me, I don't hope for Christmas rally or anything like this. I just keep following the charts, and my charts showing that through December we might have another correction. That's what's showing me this, regardless if it's Christmas, whatever. Now this is the SP500. Okay, so I'm still waiting for signs of reversal, but I'm not bearish yet for the short term. I think it's gonna go up another 3-4%, but I will be waiting for correction once it hits 3,900, 4,000 level. Okay. Now, let's go back to our market analysis, So last 4 weeks, SP500 has recovered 9.5%, whereas the ASX200, 9.35%. That means the ASX actually outperformed US in comparison to past rally and corrections. So, which is really good, mostly driven by finance and material sector. And whereas in the US, the SP500 underperformed, it still rose a little bit more than in Australia, but overall, in comparison, it has underperformed because tech stocks and Nasdaq pulling the index lower. So not actually helping to rise as much as it could. Now we've seen most of these massive tech stocks underperforming and having a poor result. Yeah, that's what's happening at the moment. Now, here in Australia, we managed to be a little bit lucrative with trading with Thyros, CXO, Polynovel, all these stocks. Now, as many trades we did in June rally, but we still managed to do enough trades to increase the overall value of our portfolio. So it's essentially still in uptrend as we speak, but we're getting close to the top of this channel here. Okay, now let's go to volatility index, and let's understand first why volatility index is so critical to watch on a regular basis. First of all, because volatility index, I'm going to quickly explain, isn't a real-time index representing the expectation of the market for volatility over the short term, specifically in the incoming 30 days. Investors normally use a volatility index, or VIX, to measure the levels of risk, fear, or stress in the market when making investment decisions. So it tends to work opposite direction of the market. So basically, what the reading here is, that volatility index, and I can use, you guys can use the plus 500 or any other tools to look at this. Now, as you can see here on the screen, let me just close this. Now we VIX, the volatility index, is also following ascending channel, which enhances the fact that overall market is bearish. So basically, every time the market reaches the top of the channel, investors start feeling uneasy, because since it's a bear market rally, it's likely to have another correction, and therefore, because this uneasy and this degradation of investor sentiment and confidence, then we have spikes to the upside on a volatility index. So VIX basically goes up. Now what we're having is a little bit optimism in the market, and then the volatility index is going down. We haven't seen any sign of reversal yet, as we're seeing here, as you can see here, but we're getting closer to the bottom of this channel, which suggests as well that we might have a correction on the way. Yes, we might have a correction on the way. Now, let's take a look on ASX200. Here we go. This is the chart. A little bit mess, guys, but I got everything we need to see here on the chart. So, first of all, let's take a look on what's happening over the last 12 months, and just assume that whatever happened in the last 12 months is a trend. So as you can see, it's a downtrend with lower lows and lower highs. We have seen upsides of 9 to 11% and downsides like corrections of 9 to 12%. So now what we have here over the last month, October rally, as we foreseen, was a rally so far of 9.35%. I still think we could reach this level here of 7,100, which equals to this, simply for the fact that these last two bottoms, as you can see here on the chart formation, it's actually a double bottom, which suggests, which kind of a little bit breaks the downtrend, especially if this next correction starts over 7,100, and then that will show that the market potentially has broke out the downtrend, the bear trend, and could start moving sideways. Still bear market because it's trading under the SMA 250. This is a concept for BG trading, okay? This is our concept. It's still bear market because it's trading under this, but as soon as it breaks out the top, then it will be a bull market for us, which is not the case at the moment. So we watch closely, but most likely we will see the markets reaching the SMA, the pink line, and then bouncing back to test those levels here, 7,000, 6,700, potentially 6,500, hopefully. That's what we're looking here. Obviously, everything is going to have directly impact from what the next CPI in US is going to be, and even in Australia here. So we're hoping that CPI stays in line and or lower, and Fed reduces its super interest rates hike. We might see the market not only moving sideways, but potentially even testing the 7,000 levels a little bit more, therefore suggesting a potential reversal. But at the moment, it's just hypothesis. We don't know exactly what's happening. At the moment, we're assuming this is still a bear market, still a downside trend, and we are about to see another correction. But we're not trading this correction yet because we are about to see the correction. We haven't seen yet any reversal indication. It is still speculation. We need to wait for confirmation. Once we have confirmation, then we can trade this correction. We're gonna trade this correction as we've been trading in every single correction via Bboz or BBUS, which are ETF funds that hedge the market. So if you want to learn a little bit, this is a great tool to short the market. And also, it's a much secure, especially when you're buying those ETF. Let's say, for instance, I'm going to open Bboz here. That's Bboz. So when you're buying this hedge fund at the lower levels, the risk is a lot lower, simply because, as you can see, you automatically buying at technically discounted price. So that's why our concept of FOMO, technically fair, technically discounted price, works for most of the assets, simply because there is fundamental value in shorting the market when the market is at the top of the channel. So that's what happened. So in conclusion to this analysis, we believe there is a market correction around the corner. Not yet, no confirmation yet, but as soon as there is a confirmation of this market correction, then obviously we will most likely hedge the market to protect our capital and potentially make a little bit of money to be able to buy a good quality trading stock at technically discounted price. Again, that's what we do here at BG Trading together with our VIP members. So hope you enjoyed this analysis, and I'll see you in the next video. Bye.